came up here, captured the liquidity. Oh yeah, I said I'm going to remove some of the unnecessary lines. Let's clean things up. We're going to get rid of you. We're going to get rid of you. We could get rid of a few others, but we're here. We was looking at this market. We identified yesterday this range in here. And the market was trading within. We saw a nam liquidity grab, push up inside of here. Yeah, break up outside of this little consolidation up in here. Now, this could be an indication. Afterwards could have been a correction and then a continuation, but we didn't see that. We saw the market on a smaller time frame started to break smaller structure bearishly, which is what we was our bias was anyway, being right at the top of that range. Okay, and over here we saw, have a look. Over there we saw, if I was to draw some lines in, like so, we saw, indications, corrections, continuations, and the market continued to fall, fall, fall. These were the updates that I was giving you yesterday in regards to this trade. And I said it's looking good. It did do a little hokey cokey at one point when it pushed back up into here. Not the hokey cokey, but it made a retracement to close up imbalance. Then it continued pushing all the way down in here until about 4 or 5 o'clock. Then we started seeing it breaking structure because on its way down, as we know and understand, is that when the market's pushing a direction, the market's moving waves, and we left these huge imbalances. If I can identify this one better here, look, big 1 hour imbalance. Let's mark it. Let's mark it. Okay, big 1 hour imbalance in here. The market came and it did what? Nam. It closed that imbalance. Closed the 1 hour imbalance, closed the 2 hour imbalance, closed the 3 hour imbalance. Close that imbalance up. Okay, and after it closed the imbalance up, I, just like you, should be watching this like a hawk. What would you be watching it for? If you was there and you're figuring to yourself that this market's going to be bearish, but it was just going and closing the imbalance as markets do, what would you be sitting here like a hawk watching this market do? What would you be looking for? After it's
An
come up in,
indication.
yeah, you'd be looking here. Because bearing in mind, you're saying, look, you want to maybe sell this market, and this is even on a 15-minute time frame, even easier for you to get in. All right. You'd be sitting here thinking to yourself, okay, look, this market, this whole energy here is a push up to close this imbalance that we've identified here. When that imbalance is now closed, you'll figure to yourself, okay, it's time to rock and roll again. You'll figure to yourself, it is time to rock and roll again. It's time to get busy again. So you'll be looking here, you'll be drawing some lines in. Have a look at this line. Look. Yeah. Touching the lowest point before the highest, the last low before the highest point. And you can even see on a 15-minute time frame, let alone a 5-minute. This push down here. Is there any clean closes? Maybe there actually isn't any really clean closes. Maybe there isn't the cleanest of closes here. All right. So let's drop down to our 5-minute time frame. So here it's a lot better. We can see here lovely closes here. This would be the low. Let me write in here. This would be the low in here. We can see how the market closed below. Indication. Started going in a little bit sideways here. Made a correction. Back down here. As soon as it came and closed back down below this level here, you would be in the trade. Indication, correction, continuation, as well as the fact of location. The location is that we are bearish. We was bearish from yesterday. But on our bearish journey, we created imbalance that the market came and closed that imbalance. And what a coinky dink. As soon as it closed the imbalance, it started doing the hokey cokey, started breaking structure. So I don't believe in coincidences. I'm just like, okay, this is what I was predicting it to do. This is in my predictions. If I was to write a story of what this market might do, this would be one of the chapters. So therefore, when it comes down here, I have the ability now afterwards, after it's closed below here, to take a very aggressive entry after my last 5-minute high, which would have been here, or to take a medium entry over this more robust high over here, as in this being a high, this being a low, this being a high. Or if I wanted to go all the way with the swing higher to be the safest place, I could do so. The safest place is about 23. Let's just round it up to 25 pips. Medium would be about 17 pips, round it up to about 20 pips. And, the high risk, very small zone would be about 7 pips. Let's round it to 10 pips. Either way, every single one of them, have a look. You'd be nice. You'd be nice. I was in the gym, but I am currently in this trade and I'm up 2.5. All right. Now, at the end of the day, on this journey here, what am I on a bigger picture now? Zooming back out to yesterday. All right, zooming back out to yesterday, I said that this market is trading within this bigger range in here. Okay, this high and this low. And all of this energy that we was up here in was yesterday looking at this little green box. We was at the top of this top range. At the top of that range. You see, this is not purple and green, guys. This is a one big purple box that's overlaying a larger green box. That's why it looks like it's two different boxes. But let me, oh yeah, that's the bigger range. I'm gonna just I'll get rid of it, but I'm gonna fade it out a bit. It's taking up too much of my eye space. All right, like that. And I'll give it a border. All right, so we can see here that ultimately this is where if I zoom out as well, look at the bigger we look at the bigger Russian doll, we're at the top of a range in a premium. All right, it's very, very simple. The markets trade from discount to premium, from discount to premium, from discount to premium. It's what happens in life. It's what happens with your favorite pair of trainers. It's what happens with the bread, or it happens with your washing up powder. At some point, it's expensive. And then you go back there and they've got some sort of offer going and you can buy 2 for 1 or you can get a discount. And then afterwards it goes back expensive. And then it goes, because you have to think about it. Imagine you as the person, you're the provider. You've got stock, you've got targets. Sometimes you're trying to clear your stock. Sometimes you've got new stock in, and sometimes you've got a new product in, it's very expensive. And after a while, that product becomes old. And then it goes down to discount. It happens. It's like the point I'm trying to make to you guys is that this is just a market. It's like any other market. The fact that it's all these weird kind of EJ, GBP, NZD, XA, all these little these phrases, these things that we may not have heard, it doesn't matter. It can be the market for anything. It is dictated by the same things: supply and demand, human psychology. There are big players and big fish, just like in a normal scenario. You're gonna go to the trainer store, and some guy just before you buys all the Air Force Ones, all the size 9s and size 10s Air Force Ones, he takes all of them. What can you do? He got there before you and he's a big fish. He placed his order. He wanted 10 of them. They can't say, I'm not going to sell you them. It's the same principle. There are big fish in these markets. There are smaller fish in these markets. People are trying to buy cheap. They're trying to sell expensive. If you've got something that you've already bought and you've got a box of them, but you want to sell them expensive. Yeah. If you don't have something, you want to try and get it as cheap as possible. This is not no new kind of flex. This isn't some brand new, so difficult to get my head around the concept of what is going on. This is actually very, very straightforward and very natural to what we do on a daily basis. I'm going to say that again. It is natural to what we do on a daily basis. I do not know one of you that try, you go to the shop and the guy says that this thing is cheaper. So you thought it was 100 quid. He said, no, you can buy it for 15. Like, I'm not buying it now. I want to buy it when it's 150. I probably guarantee, I probably could put, everything I own that you've never done that. None of you on the call. Gone to the shop and you've been fuming that it was so cheap. But I probably believe that it's possible. You have gone to the shop, and because it's been too expensive, you said, nah, I'm not buying that. It's the same principle. If I look at this market and it is too expensive, I'm not going to buy it. I'm going to be looking for potentially to sell it. Or if it breaks outside of a structure, like say, for example, now, you go to that shop to go and buy that thing and it's very expensive, but you know why it's expensive. It's expensive because this person's just died and they're very, very rare now. And even though they're more expensive than they are last week, you believe they're going to get even more expensive. There's a reason. The structure, the trend, something's changed whereby it being even more expensive is acceptable. Yeah? God forbid. You know what I mean? Like, I don't know, your favorite basketball star passed away. Well, you know that those shoes that were rare, they was only making 20 of them anyway. You know that whatever price you're going to pay for it today, there's a very high probability that in the next 6 months, a year, 5 years, they're going to be more expensive because that favorite basketball star has died now. Like his things are rare. That was the last one when he was living that he released or something like that. But that would be a reason. But outside of that reason, if I get to the shop and they're normally £400, and I get there and they're £800. I'm like, you must be nuts. I'm not buying that. Same principle. So right now, say for example, I'm in this trade and we're now near the bottom of this purple range. My concerns are what? Based upon what I've been saying to you, what are my concerns? After being in it from the sell from up here, and we're now down here, what are my concerns now about this position I'm in? Activate brain. Based upon what I've been saying. Based upon us.
Imbalances.
Imbalances is one, but that's not what I'm fishing for.
Or middle of the range,
I'm saying that this was where, we want to sell from. We've got into that sell, and we've come all the way down here. So what are my concerns now?
That the price is now cheap and the buyers may come in and push.
Exactly. That's my concern. That now we've come from, we was up here, premium, to a discount, back to a premium, back now to a discount. So if I'm in for the sell, my concern is that this market might do this, because we're down here from a discount and the buyers might be like, oh, this is really cheap now, these Air Force Ones, these Jordans, let me buy them now. That's what the concern is, because this market, if it wants to, could do this. It could do this all week if it wants to. Keep bouncing around here. And if my stop is, for example, here, well, I'm going to get stopped out then. So that's my concern. So this is why you hear people turn around and say that they trade from, one swing high to another swing to the swing low, from point to point. They're not, you see, I could hold this right now. That's a risk-free trade. I'll just leave it for now. All right. I'll tell you what I'm going to do. I'm going to close it. I'm going to close it and take the $2,000. Maybe. I'll look at it again in a minute. Yeah. I'm going to wait for the 9 o'clock. Yeah. Now look, I could, there's a battle that has to happen for this to break out of here. That battle is breaking outside of a trend. So let's explain this in a different way. Some people find it difficult to do something different to what everybody else is doing. I've never found it difficult in my time. I have been that kid that will turn up with, I don't know, this. I had a slant back in the day. Boom. You know about slant? Who remember about slant? Oh, you can't even see my camera. Let me undo my camera. I don't know what happened there. Look, I had a slant back in the day like that. Boom. You know what I'm saying? Like, some people find it difficult to not follow the trend. Unfortunately, we're living in a world right now where everybody wants to assimilate everybody else. Nobody wants to be different. So that means there's a battle that needs to happen for this to break outside of this sideways trend. This has to I want to wear straight jeans instead of baggy jeans. I want to wear baggy jeans. I'm going to do something different. That battle has to happen because there's a trend at the moment. The trend is that this market is trading within this sideways range. So therefore, I'm running a bit of a risk. Like, is this market, is it brave enough right now to wear baggy jeans? Is it brave enough now to do something different? Because if it's not brave enough, you know what it's going to do? Bounce all the way back up here. This is comfort zone. In this trend is its comfort zone. I'm safe in my trend. I'm safe wearing the exact same clothes and the exact same style as everybody else. Everybody else is wearing Gucci shirts. I am wearing a Gucci shirt. I fit straight in. Yeah. Everybody else is wearing those little Dior's with a CD on the side. I need to get a pair of CD Dior's as well because I just fit straight in. It's comfortable there. Opposed to you turning around saying, you know what, scrap those Dior's. I like these ones here, they're not even a brand, they're no name, but I just like them. I'm going to wear those when everybody goes out, when everybody else is wearing their Christian Dior's. It takes a bit of bravery. It takes a certain type of character to be able to break the trend. I'm trying to relate this so you guys can understand what the concerns are. So my concern right now is, though I believe this market actually wants to come down bearish at some point, is it brave enough to do it now? Or is it still shook and going to kick all the way back up here and stop me out? This is the concern. So just like you heard me saying, I could either take the $2,000 now and wait till it shows me, oh, I'm a big boy and I wear big boy pants and I can break out of here and then I can get back in for this. So, yeah. Or I don't. Or I stay in there and I just ride it. Yeah. And this is why you hear people turn around and say that they trade from point to point. So therefore, a point that this person would have traded to, have a look, would be our mountain tops and our valleys, our swing highs and our swing lows, meaning that when this market got down here, look at this, this is a swing low of this impulse here. Look, this is a high, this is a swing low, this is a high. Here would have been a TP. You see it? And they would have taken their money. Just like right now, I'm not going to let that trade go past 2 grand. In fact, so much so that I'm going to move my stop. All right. I'm going to move my stop and secure in 2K. Only issue is, actually, it's not too bad, is the spread. All right. But here's what it is. All right. So look, if you have a listen, that's me saying that I can't make no less than 2K. It's 2.4 at the moment. I'm dancing. Okay. Now, the point is that that's why you hear people trade from point to point. And let me tell you something about this. In my experience, this is how you should trade. All right, I'm going to say this, even though sometimes I go against it. Trade from point to point and take your money, then start again. And when I say point to point, not from 5 minute zone to 5 minute zone. Yeah. But look, this is an hour swing low. If I go to my 4 hour, even on a 4 hour, this is a point of interest. Just look level in here. Okay. This is a target, especially before markets fully open. It's 8:30 in the morning. You don't have to be out here trying to catch a 1 to 10 billion trade. Trade from point. This is a lot of times when we listen to podcasts, and I've listened to loads of them. You hear some experienced traders. I'm not talking about the guys that are saying that they're 21 and they just passed the FTMO and they just pulled out 30 grand for it. Good for you, bro. That's like, we can all go casino and make some money. We're talking about when you see them old boys that they've been trading for 20, 30 years. They're institutional, or they've got they manage big money. And you hear them say, yeah, I kind of target 1 to 1, 1 to 2, 1 to 3. You hear them say this, okay? And you're like, 1 to 2, 1 to 1, what's this guy talking about? Now, what he's talking about is this. This is a safe and consistent way you can trade profitably. Okay. Now, I'm not trying to say that you take the trade aiming for a 1 to 1, 1 to 2, because obviously we understand that if that is the case over time, you're only going to be back down to 0. All right. So I'm not trying to say you aim for 1 to 1 or 1 to 2, but I am saying that you have to make sure you understand, especially if the markets are mucking about, if they're not just trending in a direction, do not be afraid to take your profits at these major swing points. Or at least, like I have done, move my stop. That's like we're actually now at 2.6. So we actually are moving in the right direction. But I'm not coming out this trade less than 2, no. Yeah, I'm not going to, which is 1% on my account. That's what I've decided. Yeah, because there's too many times when I believe this is supposed to be going to hell. I believe we're going to break past this low here and we're going to keep going. But we've just broken a major structure over here. Or I'm not saying much structure over here. We've broken this 1 hour structure over here. For all I know, this market wants to retrace all the way back up into here before coming back down. If my stop's above there, fine. But then one may ask, well, Jay, when the market started breaking structure, this is how I trade. When the market starts to break structure against me on a smaller time frame, whether that be 5 minute or depending on how much profits I'm in, even less, I take my money. Because I haven't got a problem with getting back in. Some people only want to take 1 trade a day because they're not in front of the computer. I've got no problems with taking my money down here from being in a trade up here, yeah, and confirming that it's going to break past some structure before getting back in. Because look, have a look on this whole journey down here. The market never indicated, corrected, and continued against me. Let's just recap what I mean by that. Indication is in this direction, breaking a previous structure. All right. If there was a previous low, I'm just using it as an example. I'm not using it. I'm not showing you exactly where we are. I'm just showing it as an example. We can use it from up here if we wanted to. Let's go on a 5 minute time frame. So look, here was the last low before this highest point. All right. So an indication, a correction comes next because we know markets like to correct, and a continuation. I'm not trying to say that this is it. I'm just showing you an example. In this whole stretch, the market hasn't indicated, corrected, and continued against the direction that I'm trading in. So if, not to say that it's happening now, because it's not on the 5 minute time frame anyway. If I see it happen against me, let me drop to my 1 minute time frame to see how I can prove my point, so I can show you more realistically. Yeah, here we go. Let's have a look here. Because I have to find a correct example so it makes sense. Look, so yeah, so from this whole run, okay, apart from when the market is retracing, and even when it's retracing here, look, even in this retracement, this is a retracement here. This would be the high, right? Tell me if you can see it or you don't understand or whatever it may be. This would be this market coming down from here, making a low, making a little bit of a high, making a little bit of a low. Even in this retracement energy on a 1 minute time frame, this is the high it has to break to indicate. It might give a little bit of a breakage here, maybe it kind of accidentally closed it, but it definitely didn't correct and continue against you. You see it? It just was in this energy here, closing up this imbalance of all this 1, 2, 3, 4, 5 or 6 minutes of red candles, coming back up in here, which was the correction within this range, that dotted white range. And then when you've seen it push all the way down here, for argument's sake, have a look right now. Right now, where would we say it was a little bit of structure? I don't know, maybe here. Maybe here. So therefore, the market has to break this level first to make it to be indication. It hasn't broken and hasn't closed above this level. Yeah? So therefore, why would I be getting out? It hasn't shown me no indication, correction, continuation. That is on the 1 minute time frame. Not even in the 1 minute time frame has it showed me that it actually wants to go in the opposite direction. But if it did, if for whatever reason here was the structure and we saw an indication here, correction and continuation, I'm out. I don't need to wait for it to come all the way back up here and stop me out. Why should I? Why when I can just, and for argument's sake, let's imagine it indicates, corrects, continues, pushes up here, gets to the top of the range and then decides it wants to start coming down here. Well, once again, when it indicates, corrects, and continues in the direction that I want to be trading in anyway, I'll get back in. The only difference is now I'm getting back in with the 2 grand in my pocket. Remember, profits are not yours until you bag them. Have a look right now. We're at 3 grand. We're at 3.2. So what am I going to do? Bearing in mind now, have a look at it on the hour time frame. Bearing in mind we're coming to 9 o'clock in 15 minutes. Look at it on the hour time frame. There's a big old imbalance. Big old imbalance that's going to form in here if this candle closes anywhere near down here in the next 15 minutes. Big imbalance in here. Big imbalance in here. Why do I want to give back my 3 grand? I want to give it back. It's my money. I want it. Now, that doesn't, there is a balance. The balance is you don't want to cut your winners too early. Do you understand what I'm saying? So this is why you have to understand what is winning for you. What is winning for you? Now, if you've got a 100K account and you're up £1,000, you've got a prop firm account, you're up $1,000, and you just opened the account, so you're at 101. Are you winning? That you've only got to get to 10 grand, or sorry, 110 grand to pass your challenge. And on day 1, you're up $1,000. That means you're up 10% of your target. I personally think you're winning. I mean, another 9 days, you've passed your challenge. So therefore, if you're looking at it, this is what I'm saying to you, right? By depending on how you got in and your lot size, I don't really know. But it's not fair to just say it should be a 1-to-1. It should be a 1-to-2. No, it has to be, you're trading. You're a money manager. You're managing your money. Have a look, guys. I'm just locking in some more money. I'll have a listen. All right. You're a money manager. If you was to say to me, oh, Jay, here, hold my 10 grand and just whatever you can make on it, bring it back to me. Now, of course, if I brought it back to you at 90 grand, you'd be like, oh, wow, Jay, wow, maybe 90 grand. But at the same time, I was like, if I see that I've made you £500 and you've only given me your money like 4 or 5 hours ago, I want to impress you so you can bring more clients in my direction. Let me just bank that $500. I'm managing my money. I'm managing the whole experience. Yes, it'd be great if it was, $20,000. But I know I'm a money manager. If I bring you, say, and I phone you back 3 hours later and go, yeah, you see your money, I've got an extra £500-600 for you. And you go, what, in 2 hours? I'll say, yeah, bro. You're going to be impressed by that. I'm managing my money. So let's put it in perspective of your own trading. Just imagine that you haven't got a prop firm account, you've got a personal account, and that personal account is £1,000. And then you take in your first trade on it on your £1,000, and you're managing your risk, so you're only really risking, £10. Yeah. Or maybe if you're feeling wicked and bad, £20, 2% of your actual money. And that £20, you do a 1 to 5, and you're up £100. Now, are you winning? Well, maybe not from the perspective of can you go and buy yourself a big chain? Because I don't know if you can buy a big chain for £100. But in regards to your account, you're up on your account 10%. That £1,000 been sitting in your Santander, your Barclays, your NatWest forever, and hasn't given you £100, hasn't given you 10%. So are you winning? Well, yes, you are. Secure your £100 and then look for another high value, high probability opportunity, or wait for another day to trade. If you've traded from a premium down to a discount and now you're concerned, like I said to you, I have a concern right now. Even though I believe in my chest that we're going to break through this lower green area discount at some point, and the market's going to have some sort of retracement on a bigger picture, have a look at the bigger picture. I believe that's going to happen. But I'm concerned right now that the market might say, it's going to happen, Jay, just not today. I'm just going to do this for a little while. And it could decide it wants to do this all day long. And then I don't know, Thursday, it'll be near to this discount. See this yellow line here? And it decides to make a little push down here, tap into that discount before deciding to go back up here into a premium. I mean, EJ has been going up and up and up forever. So I don't want to get caught up in that fraff. I'm £3 up. Am I winning? And I'm telling you, the reason why I'm stressing this, guys, is because I'm telling you from experience how many times I have been trading or been in my trading journey and I have been winning, but because it's like I want it all. It's like you're at the casino table, and you're not happy with your chips. You want everybody else's chips. You're at the poker table. You're not happy with the fact that you're up. You want everybody else's money. And you end the night leaving with nothing. Or even worse, leaving with like losing from being a winner, going home with an L on your forehead. Man doing that one. The kids do that one. So you have to understand what is winning. And I'm telling you, if you're a trader and you've got a trading account, every single day you can make 1% or 0.5%, you are winning. How many days are in the week? There's 5 days in a week. If you're doing 0.5% every single day, 0.5%, I said. Forget about whatever it may be. Just forget about what you risk. Yeah? I'm just saying, if you could achieve 0.5% every single day, Monday to Friday, that's 2.5% a week. That's 10% a month. This is great. This is great results. All you need is more money for you to be living the life of your dreams. That means wherever you want to travel, wherever you want to eat, whatever clothes you want to buy, all it means is you need a little bit more money. That's all it means. Doesn't mean anything else. It just means I'm doing fantastic in my trading, but to live the life of my dreams, I just need more money. You can get that money by hook or by crook. It's down to you. If you were so confident that you could make 0.5% a day, you'd be willing to use a credit card. You'd be willing to sell your car. You'd be willing to sell your watch. You'd be willing to take some money out of the mortgage, remortgage, and put it in, because you know so confidently you can make 0.5% a day. But 0.5% a day on your 10 grand isn't changing your life. But maybe if I could take 250 grand out of the house that I sold, that I'm going to sell, or the money that I'm going to come into, let's do the maths so you guys can see it, can realize You know, to have a real realization of what that means. Let's imagine, for argument's sake, you could, I don't know, I say 250, but let's just say £100,000. That you could get your hands on 100,000 real pounds. Maybe your uncle, maybe someone else sold their house. Maybe you came into some money. Maybe you came into 200K. And before you started buying big chains, yeah, and £1,000 t-shirts, you say, no, I'm going to split that straight down the middle because I have been working on my craft for so long that I know, maybe I don't know I'm going to make 5% every day. Maybe I don't know that I'm going to catch a 1 to 20 trade, but I know that even if I have to stay in a trade for longer than I want to, I know I can make, if 0.5% a day was my target a day on this account, it means you make £2,500 a week. If you had a 100K account, 1% is £1,000. Okay. 0.5% is £500. In a 5-day week, you make 2.5 a week and you make 10 grand a month. I mean, bearing in mind, you haven't quit your job. However, you're making money at the moment is down to you. You make £10,000 a month. Now, I don't know what £10,000 a month is for you guys, but I'm going to guess it's going to allow you to have another level of quality to your life. Whether that's going to be a new car, whether that's going to be whatever place you want to rent, or whatever place you want to pay mortgage on, or whatever holiday you want to go on. That's from 0.5%. Forget about all the, oh my, I'm going to show you how I made 1 to 25. Forget about it. So therefore, all you need to do is be able to master the strategy that I show every single morning. Go over the videos, ask me questions, and then understand to you what is winning. Now, this is the problem. The problem is most of us do not start with £100,000. We start with such a small account that the definition of winning becomes quite distorted. Because G-Van just opened up an account with £500, and when he's in a trade and he's up £25, bearing in mind he only risked 1%, 1% of £500 being a fiver, he's up £25. In G-Van's brain, his psychology, he hasn't registered him being up £25 as winning. But who knows what percent G-Van is up from his £500? How much percent is he up? See who's good at maths.
50%.
Not 50%. No,
I wish £25, no?
£25 of £500 is what?
Oh, £500. 2.5%.
Nearly. Huh? Think about it. It's all, and don't be embarrassed about it because a lot of people struggle with the numbers.
I've got it. It's 0.5%.
It's not 0.5%. 5%, because this £5 would be 1%. This is the easy way to do it, guys. And this is not in any way condescending. Guys, have a look. I am 4K up now. All right, as this market continues pushing down. Sorry. Easy way to do it, guys, because obviously I know a long time ago man was in class doing percentages. Whenever there's a number, drop 2 zeros, as in move the decimal places 2 places to the left. That will give you 1%. And then whatever number you're trying to find, if it was 7%, you just times it by 7. If it was 8%, if it was 3.5%, you just times this number by whatever you're trying to find. So if obviously this is 25, 5 5s are 25, that's 5 1%. So that means he's up 5%. If G-Van's up 5% in one trade, has he won? Of course he's won. If he was doing a challenge, he's halfway there. But his brain doesn't register that 25 being him winning. That £25, like, what am I going to do £25? I'm going to stay in this trade because Jay was saying this morning that he was up 3.5K, 4K, and yeah, that's what I'm talking about. Money, some real money. But it's like I said to you, you need to understand. This is what I normally say is where you are in the universe. Yeah? What do I mean by that? I mean, some people don't know where they are in the universe. Like, you have to look in the mirror and understand where you are in the universe. Don't watch nobody else. If you're in a certain place in your life, I don't know, you're living in a bunk bed and doing certain things and blah, 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 like, you got to be like, raw, like, this is where I am in the universe. You know, me getting out my bunk bed and having my own room is progression. I can't watch the next man. You don't know a next man's story. For all you know, he won the money. For all you know, he stole the money just 15 minutes before you saw him driving down the road in a nice car. He just robbed the car. You don't know his scenario. Where are you in the universe? Because if I had a £5 million account, I'm not going to be too excited about my £25 I'm up because of where I am in the universe. A £5 million account. But if I've got a 500 quid account and I'm up $25, that's what I've got to be happy. I've got to be as happy as if I was 5 million up and now I had a £5 million account and now I'm £250,000 up. I've got to be the same type of happy. Because the only difference is that I don't have a big enough pool. But that can be fixed. Do you understand what I'm saying? You can fix the pool. The joke is this: most people here can fix the pool, who can fix the money issue. Whether it means that you put every single drop of your savings, whether it means that you ask mummy, daddy, auntie Jackie, your wife, you could fix it. But you're not confident enough to do that because you ain't got to a confident place with your strategy. And I'm not telling you to do that. I'm not trying to tell you to take the kids' inheritance money and go and put it all in a trading account. I'm not saying that. But I am saying, if you was confident enough, you'd find the money to grow your account, or you would, put that, you'd have a funded account, and you'd be trading it in a way that you have become comfortable knowing that, yeah, Jay might be able to pass his challenge, or Jay might be saying that he passed his challenge in 2 days. Well, I'm going to do 0.5% every single day, or I'm going to do 1% a day, or whatever it may be, or 0.5% a day. I'm going to pass my challenge in 2 weeks. I'm good with that. For where I am in the universe, I've just come to learn this skill. I want to get a payout. I've got bills to pay as well, but I'm not even watching the bills. I just want to achieve being able to say I've passed my challenge. Where I am in the universe, I'm happy with that. I'm winning by making 0.5% a day or 1% a day. It's very, very important, guys, because I'm telling you, in life as well, we get caught up in watching the next man, looking at his wins and trying to compare them to your wins. But like I said to you, you do not know what he has done or she has done to get to that place. Could be great things that they've done. Could not be. Maybe mummy gave him the money. Maybe mummy gave him the car. You don't know. And you're out here trying to rob and steal, trying to compare yourself to somebody else. But what you don't know is that it's not even theirs, or they didn't work for it. So like I said to you today, this morning, what I'm trying to really stress to you guys is in your trading, know when you have won. And therefore, I'm not trying to say necessarily close your trades. I'm not a big closer of positions. I'll be honest with you. But I will move my stop and secure a certain amount of money. And let me tell you something. Anybody who has done this has moved their stop to securing a certain amount of money. Let me tell you something. You see anxiety. You see the pressure. You see the stress. You see that weight on your shoulders where you keep looking at your phone, completely dissolves, melts away into the universe. When I'm in a trade and I can lose my 1%, at that point in time, you're a little bit anxious, but you want to, when I get to that point where I'm, moving past my 1-to-1 and I get to break it even and it's risk-free, I'm kind of content because I know I can't lose. But when I get to the point when I can move that money and secure in some dough, like right now, I can't lose any less than 4K. I'm just like, I'm delighted. I'm having a whale of a time. I know nothing can so understanding where you've won. You heard me earlier. I moved it at 2K. You heard me a little bit earlier. I moved it up, I think about 2,750 when it was near the 3K. Moved it some more because in my opinion, even if I come back and look at this in an hour and it's all the way down here, I've still won by securing in my, it stopped me out and then it's all the way down there. I would have still won by taking what was on the table. I'll give you another, metaphor, another scenario for you to think about, because this is quite important, because I don't think we have problems with strategy, guys. Every single morning, me showing you indication, correction, continuation, showing you premium from discount, showing you imbalances. You guys answer all the questions I ask more times out of 10, yeah? But it's this. This is something else. This is something else. Even for myself, I'm not talking that just to talk at you. I'm securing in 5K right now, all right? No, I'm not. But I'm securing in 4.5, all right? your psychology and your mind, this is what needs to work. Because I know that right now, if you guys could click your fingers within reason, maybe someone's going to say no, which is fine. But I'd say that there's going to be a large percentage of people that if they could just stop working and trade, they'd do it. Unless you have a real love for your work or a real project that you've been working on, you want to see through, I'd say the large percentage of people, if I asked everybody in Unity, if I waved the magic wand, you could just stop working, give your manager the FU sign, and just trade from wherever you want to trade from. You want to go drive to Hyde Park today in the sun. You want to go to Dubai, Caribbean, sit down and trade. You would do it. So the only thing holding you back can't be the strategy, because you know the strategy. Yes, there's always something else to learn. Ask the doctor who just opened up somebody's chest and did a heart transplant if there isn't more for him to learn. There is. There's a new bit of equipment. There's a new bit of research that's come out about the heart. There's something else going on. There's always going to be something new for him to learn. But he knows enough to do what he needs to do and get paid and do heart transplant. You know enough to take money at the markets. It's this. Is where the work needs to be done. I know. There's times I've been trading and like halfway through I got to slap myself because it's like I turned into someone else. It's into a little demon. I'm doing stuff I know I'm not supposed to do. Because I'm a human being and that's getting in the way. Your mind, your psychology. Where are you like in life? Are you quite an angry person at the moment? For whatever reasons. And when you lose a trade, you're just angry. You're down. I lost the trade. This market owes me that money back. Let me hit the button again. I know I'm supposed to wait for it to indicate correct and continue, but I'm just so angry. I just want to hit now. Oh, I lose again. Oh, gosh, I lost again. Now I'm even in a bigger hole. Now I start remembering that yesterday I was at 100K and today I'm at 96. Oh, now I'm even fuming. Now I just want to get back to 100 just to make me feel like a man again. I'm telling you, and I'm talking this to you because this is real. And maybe you should give me an amen if you've experienced these things, because it just shows everybody else that these are real emotions. These are real things. If it was the case,
Amen.
If it was so easy just to learn this strategy, indication, correction, and continuation, and then you're going to go and buy yourself a Bugatti, then everybody would be doing it. But I'm trying to show you and stress that you guys, in particular, the ones that are on this call today, which is just a small handful of you lot, you guys know this strategy. Maybe it's not to the level degree that I know it, but you know it enough. But you have to work on this. You have to know when you've won. You have to make sure you are sticking to your rule. I remember G-Van told me one time, he said something to me. I said, bro, that's not the strategy that I've been teaching you, bro. Stick to the strategy. You'd be a lot safer. Do you understand what I'm saying? And the only reason that he was doing that is because of this. Man, don't show you this is how you use your parachute. We're going to jump out the plane. This is how you use your parachute so you don't die. And halfway through the jump, you decide, you know what? Not that I know what I'm doing, but I tell you what I'm going to do. Instead of pulling the red cord, I'm just going to pull the blue cord. You're not going to do that unless you're mad. But when it comes to the trading thing and money gets involved, man, I start thinking to myself, boy, I could put in a stop loss, but if I put a stop loss in, they might stop me out. I might lose. I don't want to lose because losing in our brain is bad. It makes us a loser. But it doesn't make us a loser. Not in trading. In trading, losing is part of the game. Once we can manage our risk. But if I don't put a stop loss in, I'm not managing my risk. Yeah? So I'm saying to you guys, it's like, work on this, work on understand. And that might be this. Here we go. That might be a very strict rule-based system that you put on the wall and you say that every time, here, I'm going to give you one. You ready for it? This is what I'm going to give you. Because maybe I'm giving you guys too much to think about. I'm going to give you this. You ready? Now, it doesn't matter how many positions you're in, but I would say it's better you're in one position on one market. Every time my balance gets to 1% of my account size, I must secure this money. Now, by doing this, there's going to be trades that you get stopped. I just got stopped out of that trade, even though I think it's going to keep going. All right. But I secured 2.5% of my account size. And let me tell you something as well, guys. Hindsight is a beautiful thing. Oh, look how it went. Oh, it went for 10%, 10, 1 to 10. Oh, well, I wish I stayed in there. If I only if I stayed. Yeah, bro. I get you. Because when it kicks back and you see some big spike that happens in the opposite direction, you're saying the other side, oh, man, good job that I got out early. Do you understand what I'm saying? Yeah. Every time your balance gets to 1% of your account size, even if you're down, oh, this is a hard one. This is a hard one to battle with. Even if your account is down. So you had a 100K account and you're now at 98. You understand what I'm saying? When you get to 1%, you're gonna at least secure that money. Because when it kicks back and stops you out for nothing, or even for a loss, you feel like a mug. Like I said, I just got stopped out for 2.5%. And I actually believe the market's going to just keep going and running in this direction. But I believe for today, starting the day in the morning, that's me winning by me taking that money. And the aim of the game is to win. The aim of the game isn't to say that I'm a guru so that I can turn around and say that, oh yeah, this trade went for 1 to, it's like, that's not the aim. Like, it's not. Like right now, for example, let me show you the other bit of psychology. Right now, I'm gonna delete some of this stuff. I'm gonna delete everything. Right now, you see the bad cop, the devil on my shoulder, is saying to me, Jay, just get back in the trade right now because it's still going. Because on the 1 minute time frame here, have a look because it stopped me out on a 1 minute time frame. Over here, I say this little kickback. I had my stop all the way here, and this little kickback just stopped me out. Now that's because I just didn't want to take less than a certain monetary figure of profits. But now we've seen it again. It hasn't indicated. I could have, like I said to you guys, waited for this market to indicate correct and continue against me. That's fine. Yes, that is one strategy to get out. But I was so happy with my profits. I'm looking for any excuse to get out because I'm now at the bottom of a range. All right, I'm at the bottom of the range, and if I look at this on a larger time frame, there's huge imbalances opened up that this market might decide very quickly that it wants to kick back up and start closing. If you want to see the imbalances, look, they're here on the 15 minutes. They're definitely here on the hour. Look at this big hour candle. Look at all of this. If you want to see, let me get rid of this. Now, let me get rid of this because this green box is showing you guys the discounted area that you know, and this red box is showing you the premium area that you know. This market is now in a discount severely, and I'm up huge profits from taking the trade from up here. Could it just bust through here and keep going? Of course it could. Could it also decide it wants to, start pushing back in here to close this imbalance? Yes, it could. So now we've got a dilemma. What do you do? I've given you the answer. What you do, you're going to secure in at least 1% of your account size. And if that 1% gets to 2%, secure the 2%. If that 2% gets to 3%, that multiple, secure it. Because if this does start to kick back in here, even though, like I said, I honestly believe that this market's going to do this. I do believe. But I don't want to even be involved in it kicking back here. Why should I? Why should I let my 5 grand go back there to 2 grand, only to get back to my 5 grand when I could take 5 grand here and potentially get back in again here? Now, if for argument's sake, look, have a look here. This market just goes boom and starts going down to hell. Well, one thing we should obviously have a look at is there any catalysts in the market that might make this get very volatile very quick? Let's look at any scheduled catalysts, as in news. Well, that market is Euro JPY, and there isn't any necessary red folder Euro JPY news coming out in it soon. Okay, maybe there's some other events happening in the world, but scheduled news, no. So therefore, I'm going to say, okay, well, then we may be just moving as normal. And normal means that after breaking structure and creating imbalances, that this market at some point, even if it pushes down here, at some point is going to want to correct before continuing. I don't have a problem with the fact that I got stopped out here and I might have to get in again here when it starts to turn around or when it breaks that structure. I don't have a problem with that. 5 grand up. That's the aim of the game, is to take the money. And a lot of us do get confused and get caught up with, oh no, this is going to go down, it's going to break the structure, news is happening, something else is happening, all these factors are going to happen. But what is the aim of the game? Have you ever seen people play football? They can do 55 million stepovers, yeah, but they don't score no goals. The other team scores bare goals, the man was just running down the line and swinging it in. The other team wants to do stepovers, flick ups, nutmegs, blah, blah. The aim of the game of football is goals. So if you're not scoring goals, who cares about the million stepovers you did? I don't care. No one's going to remember your 8 million stepovers when you lost. So the aim of this game is to take money out the markets. If you are not taking money out the markets, it doesn't matter that you knew which way it was going to go. It doesn't matter that your entry was perfect. It was only 2 pips. Oh, magnificent. It matters if you are taking money out the markets. Be like a thief, yo. The thief, you see the thief? He gonna take what he gets. He's gonna open your purse and whatever's in there, he's taking it. He's not opening it and be like, what, £60? Is that it? Just leaving you with it. Nah, he's taking it. He's hoping that he opens the purse and there's £600 in there. Therefore, you're hoping that you get in a trade and boom, it just goes to hell. And now you're 1 to 6 up, 1 to 5 up. But let me tell you something. If it doesn't do that and you open up in a £60, take that £60. I remember somebody turning around and saying to me, have you guys seen these thieves here that are stealing the catalytic converters from electric cars, electric vehicles? They're getting underneath the car and they're cutting the catalytic converter out. I don't know if you've seen this, it's happening. It's not a phenomenon, it's been happening for a little while.
I have.
And people turn around and like, rah, like they're stealing it. It all for like a £300. Because they're taking that and they're selling it abroad or they're selling it on eBay for like about £300. You know, give or take, whichever different ones, blah, 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 blah. Let's just say £300. Man are like, these people are tramps out here stealing the thing for £300 in there. Now, they are tramps, they're taking a piss, disrupting a whole man's car and doing a madness, yeah? But let me tell you something. You see, if my Donny does 10 a day, or there's 5 a day, at £300 a pop, he's making big money, bro. He's taking little bit. And at the end of the month, he's sitting around in his Maybach. And you're like, bro, like, what do you do? I take £60. I trade it to the to structure. Just take that money. When I see another great entry again, I get in, take that money again when he gives me that my 1%. I do 1% every single day. That's 5% in a week. That's 10% in 2 weeks. That's 20% in a month. Sometimes I have good days and I actually get more than 1%. Sometimes I have bad days and I only allow myself to lose a couple trades a day. Yeah, because it means I'm off or the market's off. Maybe my emotions are off. This is how you become a better trader, guys. All right, it's not this strategy. It's not anybody else's strategy. Not just my strategy. And you hear me talk. When I talk, I don't just talk like I'm bad minding other people. I'm saying it's not strategy is going to be the issue. You don't need to learn 20 different kung fu styles. Boxers are boxers and they make very good money just throwing hands. None of them ain't in there working kicks. Do you get what I'm saying? So it's not necessarily every single strategy under the sun that's going to change your trading. Learn one strategy. Understand it. I don't think that my strategy is questionable. We're trading from discount to premium that we see the markets do. We have a lovely way to get in this chart after we see indication, corrections, and continuations. We wait for closes of candles, blah, blah, blah. So it's not strategy. This is market structure and price action. This is the fundamentals. This isn't at 2 o'clock, this is happening at 4 o'clock. Because you see, I watched the Instagram reel, and the guy was saying, yeah, this is a strategy we do. You can flip your account, blah, 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 at 10 o'clock. A man said, what's the win rate? And I was reading the comments. The man's like, this guy says this is the strategy that the win rate is like 5 out of 10 or 4 out of 10 or whatever it may be. So what's the point? The point is that there is no silver bullet, yo. There might be certain characteristics and things that happen in the markets, but there is no silver bullet. The silver bullet is going to be you. All right. It's going to be you. And like I said to you, try this. Every time your balance gets to 1%, secure that. When I say secure, what I mean, I don't necessarily mean close yourself out of the trade. That's not what I personally mean. I personally mean your stop loss, this line, for argument's sake, you're going to go like that, and you're going to move it and secure in that money. On your MT5 on your phone, it will show you the money as you drag the number. Same as your MT5 on your desktop, it will show you the amount of money. Yeah. Now, what's even better to this? What you add to this? Let me show you. The next phase of this is moving this to your 1%, but also taking into consideration structure. All right. So even if you're going to move it 1%, and that 1% is £1,000 dead, you're going to move it ever so slightly, just a bit above here, taking into consideration your spread, to maybe it might be 950 quid, just because you want to go above the structure or above the imbalance. That's the second phase. Because what you will find is that that market comes at this, starts kicking back, starts going towards stopping you up. Because you're at structure, keeps going. And you took into consideration your spread. All right. But initially, if you're starting off, you just want to get profitable. Every time that thing gets to 1%, just bang it in there dead. Secure that in there dead. Boom. Your history should look like that. £1,000. £1,000. Yeah, it should be, especially if you're taking high probability trades. No, sorry, it shouldn't be looking like £1,000. So I'm wrong. But you should be securing £1,000. A lot of times when you secure your £1,000, guys, it's going to run for 2, 3. What did I say to you about this one? I said to you when it got to 2, I secured it in. It ran for 5. So I'm not trying to say you're going to only be making £1,000, because when you lose, you're going to lose £1,000, and you just erased your day's wins. That's not what I'm saying. I'm saying to secure money. Yeah, and that money, that number is unique to you. If it's your personal funds, if it's your, you get it anyway. All right, let's have a look at another quick pair before we finish up. This here, even as I said, look where I took my money. Have a look. I took my money down here in a premium, and I'm not going to lie to you. Right now in a discount, sorry. Right now that discount, which is at the bottom of this impulse, this white impulse, and at the bottom of this bigger range, we're starting to see a little reaction. I wouldn't be surprised if we see this market push up to the premium of that little impulse before deciding it wants to possibly break out or possibly kick back into these kind of areas. But I don't want to sit in there for that. I got stopped out down here. I'm cool. I'm happy about that. I'm all right. Or maybe I was stopped out about here. I'm all right. All right. Let's go and look at another little pair real quick. So if you're asking me, Jay, so what should I do? What am I looking for EJ? Okay. What you're looking for EJ right now is I believe that EJ wants to break out of this level. You're going to put an alert here. If it breaks out, waiting for an indication, correction, continuation. If you see EJ breaking structure, not necessarily, well, here's a 5-minute structure. Here's some level over here. If you see it breaking structure like this and pushing up in here, EJ might want to trade back up into this premium again, i.e. it's going sideways for some time. And you can choose, if you see it indicate, correct, and continue, yeah, then you can buy it. Yeah, you can buy it if you want to. Like, say for example, here's a little level of structure, minor structure. Here's another little level. For argument's sake, if you see it do this, breaking outside of the range also, that white dotted range, correct, and then do this, you could potentially buy it up. What I would say is when you start getting 50% this impulse, definitely protect your position, because the market could come up in here where we've seen this imbalance in here after pushing up here and you're in profits thinking that you're winning. And then it could say, yep, we're done now. Now we actually want to break this level. Yeah. But ultimately, I think that this market's in a bigger premium. Have a look. Hence, and I think that I'd like to be selling it. The premium would be this top of this range here, this yellow line. Okay, let's zoom out so you can see what I'm talking about. Top of this yellow line. This market's been trading in these 2 dotted yellow lines. And therefore, I would like to see this market, get back down to this discounted yellow line over here. All right. When it gets down to here, something else, whether this market wants to continue pushing up, but I'd like to see it trickle down and get to this yellow line. So I'd like to be in it for the sell. is my point. Okay, but I can't just marry that idea. I have to make sure that I'm confirming those ideas with indications, corrections, continuations, and understanding where I am. So any questions about anything? Any questions about anything? Let's have a quick look at US 30, then we're done. US 30 USD. All right, let's go to this, delete everything off this chart. Let's refresh it. And let's understand what's been going on with US 30. All right, so when I look at US 30 like this, I zoom out, because I always want to zoom out. I want to know what's happening. I can see that the US 30, even if I go to my weekly chart where every candle is a week, I can see that this market has been bullish. And if I wanted to put in some lines, I can put in some lines. Here's some lines. Okay, this is a much bigger range. Here's the top end. Okay, general energy. Now, from there, I can try and neaten this up. You get a bit narrower to touch some more data points. Have a look. Remember, I'm on the weekly. I can go from here, which is COVID, and I can touch some data points over here, like so. I can do. I'm going to drop my time frame down to my daily because I don't need to be out on the weekly. This is just a much, much bigger Russian dolls. Okay, now have a look at what's happened. Here, we saw this market come up to here. This was a high in the market, and price broke above that level. Smash. Indication of what it wants to do. Okay, correction. Possible continuation. Did not close above this level though. Yeah, didn't continue and close above this level. This is on a much, much bigger time frame, but I'm just looking at it, that's a bigger time frame. If we was drawing some lines, we'd have a line like this, look, like so, touching the last low before this highest point, as this market broke structure, and then made a very big retracement. And now, from where I'm standing, it looks like equal highs. Maybe on a smaller time frame, it's not going to look so equal, but this looks like some equal highs and potential liquidity. So now we're concerned about whether the market's going to go up there. Some potential liquidity that is sitting above this level. Let's zoom in some more because we can't see nothing over here. This is my 4 hour. So on a 4 hour time frame, have a look. On a 4 hour time frame, have a look. The market's pushing up here bullishly. Look how we would have gotten our entry. We can see our entry. Even on a 4 hour, we can see beautiful entry here. Look. Over here. Touching the lows before the highest points. These two are the highest points. This is the last low. Indication, correction, continuation. If we go into that trade, boom, we're rolling. Coming down here, that trade looks like a nice at least 1 to 2 before it decided to come back up into these levels. So if we was to draw the ranges of what this market's trading within, we can see that the market's pushed up in here, came back down to here. The market is trading within this box at the moment, between here and that low over here. Okay, it's trading within that box. Just trying to draw it as accurate as possible. It's trading within that little range in here. Therefore, this being a premium of this range, this being a discount area of this range, if we pushed up into that premium, we had a reaction. Again, we would have been able to get another entry. Look at it. Indication here, breaking this structure, correction, continuation. You'd have been laughing all the way down here. At the moment, we're a bit of in the middle of the range a little bit, which I'm not over the moon about. It's sitting in the middle of the range. For us to draw some lines, the lines would look like this. Yeah, the lines will look like this. Touching the last high before this lowest point on a 4 hour time frame. Market hasn't quite broken that high. It's trading within this high and this low at the moment. But again, like I said, it's in the middle of a bit of a bigger range, which I'm not over the moon about. Okay. The question is this market right now going to keep coming down or keep going up? Who knows? It's kind of in the middle of no man's land. I'm not over the moon about it. Yeah, we've broken some like smaller 1 hour structure. Maybe here, a little indication, and the correction came all the way down here. Is it going to keep going up or down? To be fair, I don't really care because I don't really love it. It's not really something I'm looking at pulling the trigger at anytime soon. Okay. Maybe it comes down here, pushes up and wants to capture this liquidity because remember what we said, there is potential liquidity sitting above these equal highs. So maybe the market wants to, even if it wants to come down, the market wants to first nam, then come down. Maybe, baby. All right. Maybe it's come down here, had this little reaction here, and they want to keep pushing up. Maybe. I don't love it at the moment for where we are in the range. Okay. Though we're making these little slight higher lows. Like I said to you, I don't love it. All right. Maybe it wants to come in. If I put the top end, maybe it wants to come and tap down here and push all the way back up into here and keep pushing up. Maybe. I'm saying maybe because it's in that maybe range. Because the same way I can say that, I can say this here broke this little minor structure here and actually wants to start breaking outside of the range and coming all the way down here. You get me? So in a US 30 tip, I'd like to watch it. I'm going to pop an alert in down here as it approaches that lower discount line if it wants to come back and tap that there again. So crossing down. And I'm also going to pop an alert above this level over here if it wants to push up and cross up. And I'm just going to watch it, see what it does. But guys, good morning. Good morning. God bless. Thank you very much for giving me your time. Hopefully you've learned something. Remember, it's in here, guys. Yeah, the strategy, we can always blame the strategy. It's easy to blame the strategy, point at somebody else. It's his fault. It's the strategy's fault. The strategy doesn't work. Let's find a new one. Let's do ICP. Let's do this one. Let's do a little bit of that one. Let's glue a little bit of this one onto that one. Let's glue another bit of that. It's here. It's the only place it's going to be fixed is there. And that takes time. It takes time for you to build up those muscles of when you know you're doing something mad, you're doing something else. You're going against that madness and doing something that is going to be productive. It's going to be productive for your trading. All right. But guys, good morning. God bless. I'm just having a look here. There's a guy here, Ultimate Trading Statistics and Psychology Masterclass. Never lose a challenge ever again. We're going to watch that. And I'm going to wish you guys an absolutely fantastic Tuesday. Going for your potential and have a good day trading.
That they hate their jobs or they hate their life to a certain degree. I can't wait till I go full time. You want to skip the process along the way. And trading and gambling are 1 degree off from one another. And when they go on that like negative technical edge, I tell them, my guy, just go and play blackjack at a casino. You can look at a technical model and you could say, hey, this should produce this over a long period of time. And yeah, fair enough, it should. But then it doesn't. And then the question is why? Why people follow the traditional society structure?
I know it's a positive session,
not this
bro.
hyper, like
Therefore,
you've been
some knowledge in
brainwashed.
there.
Yeah, love my bro. Like I said to you, that the trading thing is
Yeah.
even it looks like just by coincidence. If it's coincidence or if the algorithm is listening to my whole conversation, who knows? But I'm saying like that this is what the guy's probably going to talk about. He's probably going to talk about similar stuff. Do you know what I mean? And it's just interesting because like I said, if you did probably ask yourself whether you'd just be able to would you just like to trade, make money from at home, be going Bond Street, 3 times a week, you'd probably say yes. But the only thing that's stopping you from that is not the strategy. It's just your mind. You understand what I'm saying? Yeah. And if man can control that thing there, then man can have what they want. And that's kind of universal to a lot of things in life, bro. If you can control
100%,
your
bro.
emotions and your mind, then you'd be good, bro. And it's like, and I'm not talking just for you, I'm talking for myself as well. I'm the same scenario, bro.
100%.
Same scenario. I'm just further down the mountain or up the mountain than you are.
Yeah.
But it's still a constant battle with your psychologist.
The journey.
You're the journey, bro. And if anyone tells you differently, like they're just zen, they're just crypto zen, they're lying, bro. Do you understand what I'm saying? Because so many things affect that. It might be the case you just had an argument with Mrs. And then now you're coming to trade and you're just doing madness, bro.
Yeah.
This is just like boxers, yo. Boxers go in the ring. For all you know, Deontay Wilder got a cleaners over the weekend. But for all you know, obviously I don't think Deontay Wilder is the best fighter anyway. But I'm just saying, yeah. Like for all you know, he wasn't there, bro. He was thinking about the argument he had with his missus. He's thinking about the bills that he has to pay. He wasn't in the right space.
Not me Saturday.
Of course, hey, come on. Of course it's not Jason. Jason's ready, bro. He's an annihilator. You talk about I have to come in the corner and give you some psychology talk before the big fight, bro.
Trust me.
Say, might as well splash your water on them and that. Get your
Yeah,
head in the
bro.
game, man.
Dash some.
All them hard slaps.
Yeah. Wake up. And hit TP. Hit TP. Nah. Yeah. Anyway, weekend. For the people that haven't got tickets yet, man, I'm gonna definitely go down see Jason boxing. I was talking to Sim about it still. So yeah, well, it's gonna be good. So we try and round up a couple man and see if we can come down there and do the thing. But you're gonna be nice, bro. You're gonna be nice. But you know, we ain't done our session though yet, bro. I'm thinking to myself, maybe I have to try and sneak a session in before Saturday. When are you back in the gym?
Now it's all about rest. Now I'm not sparring. I'm not doing anything. Now it's just relaxing my body, getting my body in prime condition. I've got a bit of niggling injuries, so after we definitely have to do it. After I'm going to try and keep it up.
Say nothing. It's going to be a good night, man. It's going to be good.
Nice.
All right.
Also, there's a little after spot in Beckenham, so about 10 minutes drive from Crystal Palace.
Bro,
there's a little after party.
So yeah, whatever's going on, that's all right, bro.
Tickets are £6. You need to get the tickets. So, couple tickets.
Put the link in the chat.
I will do. It'll be good to see everyone.
Yeah, man.
Say no more. I'm gonna try and galvanize everybody as well because I think people are still sleeping. But so we'll galvanize some people to come down. But yeah, bro, all good, bro. Either way.
Thank you.